The train car was dark, even though it was the middle of the night, curtains drawn, lights low, no one using real names. The men inside avoided eye contact with the conductor. They were told not to speak unless necessary, not to leave the car, not to mention where they were going, because if anyone knew who was on that train, questions would start. And questions were the one thing they couldn't afford. One of the men sat near the window, staring at his reflection in the glass. He wasn't nervous about the journey, he was nervous about the country. Banks had been failing. People were lining up outside financial institutions, demanding their money. Businesses were collapsing not because they lacked customers, but because credit had vanished. Trust, the invisible glue of the economy, had broken. And when trust breaks, money stops moving. Before we go further, if you like real stories where power, money, and hidden decisions shape the world we live in today, subscribe to Fiscora Empire. Because some of the systems that control your financial life began in rooms you were never meant to know about. The man near the window was not just a banker. He was one of the most powerful financial figures in the country. But tonight, he traveled under a fake name. So did the others. Across from him sat a senator who publicly criticized big banks, but privately knew the system was collapsing. Next to him, an industrialist whose companies depended on steady loans to survive. Each of them represented a piece of the financial machine, and each of them knew it was breaking. The train slowed as it moved through empty countryside. No announcements, no station lights, just a quiet stop where no one else got on. A car waited in the dark, no driver in uniform, no luggage tags. They stepped off one by one, careful not to be seen together. Because if the public knew these men were meeting in secret while banks failed and people lost savings, trust might shatter completely. The car took them to a remote island off the coast. Private property, no reporters, no curious locals, just a large house with lights on inside, a place where decisions could be made without headlines. The men entered quietly, coats still on, tension thick in the air. Outside, the country was in financial panic. Inside, they were about to design something that would change banking forever. The problem was simple but terrifying. When banks ran out of cash, there was no backup, no safety net, no central place to turn. Each bank stood alone. And when fear spread, people rushed to withdraw money, causing even healthy banks to collapse. It was like a line of dominoes, falling one after another. The men in that room knew something had to be built to stop the fall. But they also knew the public hated the idea of bankers gaining more power, so they faced a dilemma. How do you create a system controlled by banks, but make it look like it serves the public? How do you prevent collapse without sparking revolt? One of the men spoke first. He described a central institution, a bank for banks, a place that could lend money in emergencies, a stabilizer. If panic hit, this institution could inject cash and stop the chain reaction. It sounded like a lifeline, but it also meant concentrating enormous power in one place. Another man objected. If people think Wall Street controls this, he said, they'll never accept it. So the discussion shifted. They talked about structure, about names, about language. It couldn't sound like a private banking club. It had to sound national, official, protective, something that sounded like it belonged to the people, even if it was designed by the financial elite. Hours passed. Cigars burned low. Papers filled with notes. Outside, the country slept, unaware that a new financial system was being shaped behind closed doors. One man leaned back and asked the question no one wanted to say out loud. If we build this, he said, who does it really protect first? The public or us? Silence filled the room because the truth was complicated. The system would protect the public from collapse, but it would also protect banks from failure. It would make risk safer for those who controlled money. It would change who carried the danger when things went wrong, and that decision made in secret would echo for generations. By the time dawn came, they had a plan, a blueprint, something that could stabilize the economy, something that could prevent bank runs, something that could reshape how money moved across the country. But they also had a problem. How do you introduce a system designed in secrecy to a public that distrusts powerful bankers? That was the next challenge. And it would be even more dangerous than the meeting itself. The morning air was cold when they stepped outside the house, but no one commented on the weather. Their minds were somewhere else. The plan they carried was heavier than any briefcase. They had agreed on the structure, the function, the purpose, a central institution that could act as a lender of last resort, a stabilizer, a quiet force that could step in when panic spread. But they all knew something else. The hardest part wasn't building it. It was selling it. Back in the city, the newspapers still screamed about bank failures. People lined up to pull out savings. Business owners begged for loans that never came. Fear moved faster than facts. And in that fear, politicians saw danger. Voters were angry. They blamed bankers for the crisis. Any proposal that smelled like Wall Street control could explode politically. The senator from the meeting knew this better than anyone. He couldn't present the plan as something born in a private house on a remote island. He had to frame it as reform, protection, a system to guard the public against reckless banks. The language had to shift from power to safety. Meanwhile, the banker who had spoken first at the meeting began another quiet operation. He contacted newspaper editors he trusted, influential voices. He fed them ideas carefully. The country needs stability. The economy needs a backbone. Panic must be controlled. Articles began appearing, talking about the need for banking reform and financial safeguards. The ground was being prepared, but resistance formed quickly. Smaller banks feared losing independence. Farmers feared big city control over credit. Populist politicians warned of a money monopoly. The plan, still unnamed, faced attacks before it was even introduced. Inside private offices, the men from the meeting met again, this time in pairs, never as a full group, too visible, too risky. They debated concessions. Regional branches were added to the design to make it look decentralized. Government oversight was written into the proposal to calm fears. The system would look public, even if its operations were guided by banking expertise. Weeks turned into months. Drafts became bills. Speeches were written behind the scenes, lobbying intensified. Bankers met lawmakers quietly. Industrialists explained how credit shortages hurt jobs. The argument was always the same. Without a central stabilizer, crises would keep returning. Each panic would be worse than the last. Still, doubts lingered. One congressman asked a direct question during a closed-door session. If this institution can create money in emergencies, he said, who decides when an emergency exists? No one gave a simple answer, because that power was the core of the system. Control over money supply, control over credit flow, control over the financial heartbeat of the nation. Outside, the public debate grew louder. Some called it a rescue plan. Others called it a banker's coup. Newspapers split along lines of support and fear. Protests broke out in small towns. The word trust came up again and again. Could people trust a system designed by the very men they blamed for the crisis? The senator from the train understood the stakes. If the bill failed, more banks would collapse, more businesses would die. But if it passed without public confidence, unrest could follow. He walked a tightrope, shaping speeches that promised protection while hiding the origin of the plan. Finally, the day came. The vote, long hours, heated arguments, last-minute deals. When the bill passed, it didn't feel like victory. It felt like relief. The system was born not with celebration, but with exhaustion. The new institution stood ready. A central bank, though the term wasn't emphasized, it could lend in crises. It could influence interest rates. It could calm markets when panic threatened to spread. And it could quietly shift power. The men who met on that island watched from different rooms as the news broke. They didn't call each other. They didn't toast. They simply went back to work. Because now the real test began. Would this new system prevent collapse? Or change who benefited when the system shook? And what would happen when the next crisis came? The first real test came sooner than anyone expected. Markets trembled again, and smaller banks began to wobble. This time, though, something new happened. Quiet loans flowed, where before there had been nothing. Panic slowed. Lines outside, banks shortened. People didn't know why, but the system held. The men who built it watched from afar and saw proof that their creation worked. But another pattern began to form. One few noticed at first. When trouble hit, the largest institutions received support fastest. They were deeply connected to the new system. They had direct lines. Smaller banks waited longer. Some survived, some didn't. Over time, the financial landscape shifted. Fewer independent players, more power concentrated in institutions tied closely to the central system. Years passed, and the public grew used to the idea that someone, somewhere, could steady the economy in emergencies. Few remembered the secret train ride. The island meeting faded into rumor, but the structure they built became permanent. It shaped interest rates, influenced credit, quietly guided the flow of money across the country. Then came a much larger crisis. Markets crashed worldwide. Fear surged again. This time, the central system stepped in on a scale never seen before. Money flowed in waves to stabilize banks and markets. Businesses survived that might have failed. Jobs were saved. But another effect followed. The largest financial players grew even larger. They had access. They had connections. They were inside the circle of support. This is where the story shifts. The system born in secrecy had two faces. One face protected the public from economic collapse. Without it, crises might have destroyed savings, jobs, and entire industries. The other face quietly changed how risk worked. When markets rose, private gains stayed private. When markets fell, public systems absorbed the shock. Losses spread wider. Safety nets grew stronger for those closest to the center. Over decades, this pattern repeated. Each crisis strengthened the role of the central institution. Each intervention made markets depend more on its presence. The invisible backbone became essential. And with that dependence came influence. Decisions made inside that system affected mortgages, business loans, investments, and savings. People felt the effects without knowing the source. Today, when rates rise or fall, when markets surge or struggle, echoes of that hidden meeting still shape outcomes. The system was built to prevent collapse, and in many ways it succeeded. But it also built a world where financial power concentrates during stress, where stability sometimes means choosing who survives. That is the hidden tension born in that house on the island. Protection versus control. Safety versus concentration. A system designed in secrecy that became the foundation of modern banking. The question for today is not whether the system should exist. Most would agree stability matters. The question is how power inside that system is balanced. Who has access? Who carries risk? Who benefits most when rescue comes? Because the next crisis will come, history guarantees that. And when it does, the structure built in that quiet meeting will act again. If this story changed how you see banks, crises, and the flow of money, share your thoughts below. Do central systems protect us? Or protect those closest to them? And share this with someone who thinks financial history is just numbers. Because sometimes it starts with a secret train ride in the dark. Stay with Fiscora Empire. We follow the money behind power.